John and I have been doing business together for a while now, and his company is part of a broker-dealer, and we trust all of our clients to John. This is the only channel that we use to help our clients turn their IRAs into self-directed IRAs. And there's a lot of things that John's going to talk about today that'll hopefully plant some seeds in your heads that can eventually be planted inside of your clients and referral sources' heads about what we think is the best way to take control of your IRA and earn potentially better returns than they are now. And with that, John, I'll let you take over here.
Okay, great. First of all, thank everybody for being on the call today. I'm with a company that offers alternative investments and alternative financing. Today we're here to talk about alternative financing, specifically using self-directed IRAs, and we think it's exciting and our clients think it's exciting because it allows our clients to be their own bank and take over the function that before they had sourced out to their stockbrokers or their bankers or insurance agents. And we like to say by being your own bank, you take control of your future and gives you the ability to retire affluent, which is everybody's goal, is to obviously be successful and be happy. Self-directed IRAs enable our clients to invest in a number of alternative investments that they wouldn't have available to them. One of the benefits is they can do that by rolling out of their current qualified plan into a self-directed IRA without any tax consequences. And they can use that money to fund a business, buy real estate, they could buy tax lien certificates if they're interested, they can buy a franchise, apartment buildings. There's a number of things they can do. There's a few things they can't do, and we'll cover that later. And instead of going to a bank for traditional financing, our clients really are their own bank. They roll over the funds using our service, set up correctly from a corporate structure, and then it allows them to invest in a number of things without tax penalties within the self-directed IRA. It's an alternative financing source, really, that allows you to invest in something that you really control. And like we say, our mantra is be the bank. It really allows the client themselves to affect the value of their investment as opposed to just giving their money to Wall Street and a 28-year-old fund manager or somebody down the street that put up a shingle. They truly control what can happen with the IRA. And what's neat about it is it allows them to have kind of lower starting costs if they're starting a business or buying a property. They don't have the monthly payment over their heads, allows them to get going quicker, and it also allows them to get better returns because it's happening tax deferred. So as they're starting to grow their IRAs, they're not paying taxes on those gains.
Can I ask a question on that? Can I jump in there,
John? Sure.
I talked to a woman today who has a business, and she says half of my business is owned by my IRA and half by me. Is that something that people could do with a self-directed IRA?
Yeah, and actually that's a great question. We have a number where we have to structure it where the IRA, for example, owns 51% of the business. And the benefits to that are that 51% of those profits can be rolled back into the IRA and you don't pay taxes on them. So if you're in a 30% tax bracket with your state and federal, really you're saving that and it's being tax deferred, so it's a nice little nest egg. And in certain transactions, we have to set it up that the IRA owns 51%. For example, a franchise where someone's not going to buy the franchise as a passive investment, meaning they're not going to work there. If they're going to actually work there and pay themselves a salary, then the code mandates that the IRA owns 51% of it. But it doesn't mean that you can't own it with somebody else. Your IRA could own 51%, and then you could have 3 or 4 partners that own it, or you and your spouse's IRAs could own a percentage of it. So there's different ways to set it up. So yeah, that's viable. It really depends on the person's situation. It really varies.
But I could see the huge advantage because if you're in a business where you're really making profits, you just need so much to live on, and all the rest of the profits, or the 51% of them, can go right into that, like you said, tax-free into your IRA. That's a huge advantage.
Yeah, and two, we're working with a couple clients now. We had one a few years ago that their portfolio kind of took a hit. So instead of just rolling it into a traditional self-directed, they converted to a Roth self-directed IRA. and they've turned about $50,000 in that account to a little over $1 million, investing in tax lien certificates and providing hard money loans for people that couldn't get loans to rehab. So that built up quickly. Another way too is an individual may want to take out the mortgage on their own home, and then they pay themselves the interest on the mortgage. So let's say they charge themselves 4% interest. They've got 4% gaining in the IRA monthly that they're paying to themselves, but they're also taking an interest deduction on their taxes. So they're really getting a compounded an 8% return on that money. So there's a lot of benefits.
That's just huge. I'm just thrilled. I think I can see that there's a lot of huge advantage to this.
Yep.
You know, I just want to interject too here. Obviously, you know, our disclaimer: we're not lawyers, accountants, tax advisors. We can't promise about returns anybody's gonna make. You know, just this is great information. I mean, the people that turn 50,000 into $1 million, you know, that's extraordinary. And obviously, they must have had some expertise in making the loans to begin with, and then they took this $50,000 and they really pyramided it using their knowledge of loans. Sounds like.
Yeah, that individual actually was interesting. He used to work. He actually worked in the construction field before. So he had some knowledge of, you know, what would be a good buy. It was something that interested him too. I mean, if you're going to go out and you're going to invest in real estate and you have no expertise, I would say study first, or I would say get good advisors around you that can help you do it. I mean, it was something that was in his ballywick or his wheelhouse to begin with, and he just took it, and that was his dream, and he ran with it, and he had a good plan and everything. So he did have knowledge. We can help you get the store, but we can't mind it for you. You know, it's going to be up to you to get the education to do that. So
good, thanks.
Yeah, and basically you can take any type of account, an IRA, a 401k, 403b, KIOs, whatever, and roll it over without incurring any penalties. And you can use that to, you know, launch a business, real estate. Obviously, there's tax benefits, and you can use all of your retirement funds to do it. You could roll over a portion and invest the difference. You can also use it as a down payment on an SBA loan. Let's say, for example, you want to buy a franchise. Instead of buying one franchise, you may use it as a down payment to buy 3, or use it for a liquidity requirement within an SBA capital stack. And in that way, you have the ability to leverage it as well as qualify. And you don't even have to worry about your personal credit or having it go off your lines of credit, or in terms of underwriting. It's kind of free money. What you can do too is we have clients that, husband and wives, that let's say they want to invest in real estate. They'll take both their IRAs and roll them over, and then each one of their self-directed IRAs owns a percentage of the property or the business that they set up, and they can also bring in other partners too, depending on how we set up the member agreements for them. So it's pretty flexible. We had a group that actually put together about 200 investors, all self-directed IRAs, to start a bank. So that was interesting. Some of the other benefits is you're using funds that are just sitting there. It doesn't go on your credit report. You're basically your own bank, so you're not reporting late payments on yourself. Any of the profits, this is huge, the profits can go back into the self-directed IRA. So if you're going out and buying and selling properties, you don't have to do a 1031 exchange. You just go ahead and boom, you sell it. You made $100,000. Now you've got $100,000 more in the IRA, and you can take that and you can leverage it to buy more properties or down payments. There are banks that we work with that do non-recourse loans for self-directed IRA accounts. So there are banks out there that specialize in that. They do most property types. There's some commercial property types they don't do, but on the residential side, it's pretty easy to get done. We've had some trouble as of late getting mixed-use commercial, but those are hard to do anyway. You also position yourself for faster success because you're getting the pre-tax dollars are starting to grow. So you're getting what you would have paid on taxes, or just is this rolling up. So it allows your account to grow quickly. It's a great way too for a business owner to take a portion of those profits. Let's say the IRA owns, let's say they own 51% of an apartment building. Well, 51% of the revenues coming in are not taxed. It's tax deferred. So it just stays in there and rolls in the account. It's in a money market account, and it rolls, or you can take it and invest in tax lien certificates that can get you 15 to 18%, and you always get paid on them when the property is disposed of. So you have the ability to do that, and anything that's rolled in there is just not taxed till you take it out, or forced to at 70.5 for minimum distributions. So it's the same rules you'd have with a traditional IRA. It's also needed. It allows somebody, if they want to buy a business, the last thing they want to do is wait. Wait 6 months to get declined in an SBA loan, or have the bank wait forever to get it. This way, they say a deal. They've got money in their self-directed IRA. They can move on it immediately. They can come into a deal and say, you know what, I'm going to offer you cash, and we're going to close in 2 days. And they can obviously have a price that's much lower than somebody else who's got a financing contingency. So it gives you a leg up when you're looking at REOs in the marketplace that are 25 cents on the dollar, and you have the ability to close on